Well, ladies and gentlemen, FOMC Live. Welcome to the most likely the wildest time in the charts. Federal Reserve Jerome Powell, CEO, top boy, will be letting us know the fate of the interest rates. Bets are on the board that they're going to be holding, but we're going to be paying close attention to that tone. Is it going to be hawkish? Is it going to be dovish, aluminium? Just to get that correct, I will always say it, especially when I say those words, dovish. It's just a UK thing. But anyways, ladies and gentlemen, if you are new passing through to today's live stream, this is one of the biggest lives of the channel. I hope you are liking tonight's attire again. Always got to bring out the flavor. You know, the EXO style shirt from Call of Duty. This is a Call of Duty shirt, ladies and gentlemen. You see the gaps, you know. I've said this before. Those of you who know. But tonight's going to be a very interesting move. Powell will be speaking, or should I say the Federal Reserve press conference will start in just shy of an hour's time. And what I'm going to do from now until that point is we're going to just have a look at what's moving in the marketplace. I'm going to be taking questions on certain coins that you might want me to look at, but we're going to be focusing on Bitcoin. I want your opinions. I want questions about, Tina, do you think this? Tina, do you think that? Anything regarding the hybrid system. If you are completely new and have no idea what I'm talking about, I'm hoping that I can actually get enough information over to you within the time frame of Powell speaking. Now, some of you might notice that there is a poll up there on how many times Powell will cough. I only just taxed that from a gentleman that actually put it in the chat, asking people, place your bets, please. How many times do you think he's going to cough? Now, listen, I'm going to be frank with you. As we're listening to Powell, because I will be bringing it and we are going to be streaming it, if I start laughing at something, I'm laughing at how Powell is behaving and how he diverts answers and how he keeps on reiterating the idea of data. Well, Jerome, you've had non-stop the same data that's been coming out. Okay, unemployment claims have been going up. They've been going down. Unemployment rate just seems to be going down at the lowest in 50 years. Happy days. Biden economics. What a guy. But we're going to really know if this is the moment that Bitcoin can actually pull through. If today's live stream where we witness the bids coming in very aggressively, bids at $62,000, we're talking now $45 million worth of bids coming in. They're buying it as it's dropping. We're going to be looking at this in the chart just to see if this is the point Bitcoin can reverse from. Otherwise, if Powell does put us nail in the coffin, then we're going to have a bit of a problem. Bitcoin might be at a discount yet again. Don't question it. Always buy when it drops. So, let's get with the program, ladies and gentlemen. It's good to be back. I only did a live stream about 2 hours ago. But anyways, here we go. All right, then. So what have we got, ladies and gentlemen? Bitcoin to the right, past me, the Dutchie. Those of you who know. And we've got the S&P to the left of us. Now, the S&P is trailing around the all-time highs. What a time to be at an all-time high. S&P on the left right there, just toying between the 5,236 mark. I placed no trades today, none whatsoever, because I'm not going to get caught up in this chaos that could unfold, okay? In my opinion, it will be tonight. That's when I may actually even trade the Asian session, because Asia will react to what the news will be. Okay, they're going to be waking up and be like, rubbing their eyes and like, oh, okay, so what's Powell said then? Oh, he's held the interest rates. Same story. What does that mean? Well, that means we can pick up more yield on dollars. Yeah, you know what? I might as well go and buy myself some dollars right now so I can lock in a good old yield. Those of you that may not know what I'm talking about the Treasury yield. So if we just quickly go over to that to put things into perspective, this is what we really need to be focusing on. The 2-year. Now, the 2-year last night, or just early hours this morning, gapped up, all right, and did this sweep to the upside and hit 4.7%. What does that tell you? It pretty much tells you that if you give me, as the US government, you give me $1 million, I will gladly give you a bond of 2 years and give you a return of 4.7%. That's That's what it peaked out to. Right now, it's at 4.6%. And ladies and gentlemen, we have been on this inversion of the yield for such a long time to the point where the NASDAQ and the S&P have hit all-time highs. Now, excuse me, that doesn't make sense. When the yield curve inverts, that means, for anybody new, when the 2-year and the 10-year invert, it tells us that there's something wrong with the way investors are utilizing investing. What do we mean by that? Well, if you've got the 2-year yield generating you more of a return in a shorter period of time compared to the 10-year, which is now at 4.2%, that tells you that investors are not favoring the long term of the economy. It means that they're only happy to lock up money for a shorter period of time rather than for a longer period of time. The sweet spot will be when the yields flatten out. That means when the 10-year is actually above the 2-year, because logic would say when you invest something for a longer period of time, you're naturally going to be earning more. But right now, that's not the case. That's why we see these rallies up and then they just bring it straight back down, because the longer term period suggests that they may not be looking favorable to the upside. But we keep on getting the upside, ladies and gentlemen. That's the cause that we've got right now. Going again, like I said earlier on, the volatility index is trading at significant lows. The volatility index gives you a little bit of a measure in helping you understand where players are in terms of options market. So if we've got calls or puts, calls means you favor higher prices, puts means you favor lower prices. So right now, when the volatility index shows a reading of 13, it tells me that there are a lot of people that are optimistic about things, okay? But there's not many people playing puts. So what's going on here? When this is high, you buy. When this is low, fundamentally, you hold or sell. Okay? But we're not getting that consistent reading right now. We're not getting it. There was a trader, they called him the 50-cent trader, who's bet that at one instance, the volatility index will hit 180. Do you understand what that means? Well, let me put it into perspective for you. COVID, look what happened there. Zoom out. This was COVID. And that was at 101. 101, where the economies just went done. Now, this guy's betting for 180. Ladies and gentlemen, what would have to happen at 180? Like, really, what would have to happen? Even the analysts are even saying, like, look, if it hits 180, you need to be asking yourself, how are you going to get paid? Because if it hits 180, then there's a problem. Economically, worldwide. An EMP, for example, that wipes everything. How are you going to get your update? Let me just log in and find out what my returns are. But 180 is what he's calling for. And he's renowned on Wall Street as well. So that will be very interesting. Going into BTC right now, ladies and gentlemen, just looking at the chart, we can see Bitcoin showing us the promise of a lovely recovery on what appears to be a nearby vector candle at the 50 EMA. Now, this is what's got our attention. Going into the hour time frame, you can see today's been a bit tricky, and Bitcoin has been delivering some form of flavor to the downside and then makes a little bit of a reversal back up. The problem that I've got is Bitcoin has rejected this 50 EMA. I would be more inclined to believe the following. If and only if this move to the downside on Bitcoin by the principle of the psychological levels. Now, if you are new to this live stream and you're not familiar with the psychological levels themselves tell us the first high and low that has been formed at the start of a trading week. All right? Now, when we see these levels form, we usually see a false move away from them, either to the upside or to the downside. And we've got the downside right now. So are they marking Bitcoin lower to effectively try and bring it back up again? That's what the logic would say to me based on this. But we do have a bigger picture that we need to consider, and that Bitcoin has been overly extended to the upside. If we just go and have a look where we are, it was up 50% for the quarter, ladies and gentlemen. I haven't got it up, but never mind. But with that being said, we're just going to have a look now. Look at our bids. Okay, so we answered this question earlier on. What do you see more of? Do you see anyone selling? I don't see anyone really selling to the tone. I mean, look, what we got, $13 million worth of Bitcoin as the initial amount. at 66,950, and that's what someone is prepared to sell from, okay? So we understand that someone has previously bidded Bitcoin inside each of these areas right here to effectively sell up here. But that might not be the case because this order, all right? So let's just put this into perspective. This order has been in the chart. Let me just find it again. Here we go. This order has been in the chart for around 5 hours and 19 minutes. So if we go back in time, we can say, all right, in the last 5 hours or so, we can assume that this person was buying up their Bitcoin inside of this range around the 62,000 mark, and that would logically be a spot where they would want to sell it from. Make about a $5,000 move on Bitcoin. Happy days, okay? That's what we're trying to understand. We're trying to gauge the idea that there's going to be enough people here that are happy with Bitcoin and that the market naturally needs to start reverting back up to effectively start offering, which then means it becomes a seller's market, okay? Now, going into the book map itself, just to look at Bitcoin, we're going to be having this up whilst we're listening or watching Powell. And looking at the profile of the book map, I can see I've got some bids all the way down here. I'm just going to move this out a little bit. And the way the live is going to be set up, ladies and gentlemen, is we're going to have Powell speaking in this little window right here. And then we're going to have EXO charts to the left of the chart. We're going to have Bitcoin price in the middle. And there's going to be my little head talking around listening to Mr. Powell. Okay? So whilst we're just looking at this right now, we've got Bitcoin currently holding below the 64,140 zone. So looking at this image right now, or this live feed of data coming from the book map, we can see that we've got a collection of offers. So in the short term, we can make the assumption that there is a seller's market that could be triggered very soon. When I say seller's market, it means that we're anticipating price to shoot up. Okay? Now, those of you who are new passing through to this, please let me know if you are up in the air about when I say that a seller's market means we're going to see prices move up. Can you type 1 if you don't understand what I'm saying and you want me to clarify on this topic? I just want to make sure that I understand my audience is understanding what I'm saying. Whilst we're going to wait for those answers, we'll just have a quick look at the questions here. Isn't the market a zero-sum game? How can it be buyer's market if it's going down? There needs to be sellers, so it'll be equal out right there. Can't be more buyers than sellers and vice versa. Well, no, what you got to understand is that bids, there is this challenge, or should I say, players in the game would say that this is true. Some would say it's not. But the idea is that in terms of a profile, all right? So let me explain it to you like this, just to put it into context. In front of you right here, we've got this profile of Bitcoin, okay? I'm just going to expand it out for you so you can see. Come on, bro. I hate this. I have to do it so finely. Wow, look at that. Here we go. Okay, right. So this is the EXO charts, and this is the volume profile of Bitcoin, okay? The blues are the bids. The reds are the offers. Now, you're saying it's a zero-sum game. How can there be buyers? How can there be sellers? Well, the fact is there will always be someone to buy and there will always be someone to sell because everyone does not share the same value at price. They don't share it. Someone that's in this area right here at 64,000 might think Bitcoin is at a discount. He'll buy it. Someone at the 64,000 part might think this is an area where I can sell it, okay? Naturally, retail traders will sell to offload. In order for them to offload, price needs to hit the bids for those bids to pick up those orders. At the same time, the offers, the guy standing there, yoo-hoo, we want to sell to us, you know, we're prepared to take it from you. Come on, buy it from us. We want you to buy. They lift the offers, okay? So you might hear terminology in various marketplaces where they're saying hitting the bids, price is going down, lifting the offers, price is going up. But what you've got to really look into is who is influencing what, because this is an auction, and who's going to win the battle, right? So when price is going down and the market's crashing, yes, investors are selling. They want to sell. They want to sell. Who do you think they're selling to? They can't sell to sellers because what's the seller going to do? I don't want your order, bro. I'm trying to get rid of mine. I don't want it. So who's going to be there? Well, there's going to be some guys that are coming in on the book. You see here, you've got a guy sat here at 62. Right, I'm going to change the tick. No, we'll keep it at that. Right now, you've got an order down here at 65, okay, for 63,481, okay? So he's got a bid for 68 contracts on Bitcoin. So he's sat there on the order book right now. I'm paying attention to that because I know that they're going to want to transact that order. And if they keep changing it and holding it in that range, I'm going to be of the impression that if price were to go down there, I'm going to see an area of interest by investors to buy Bitcoin, okay? Because that's the lowest price that they're prepared to buy it at, all right? So even though it is a zero-sum game, in other words, one man's fun is another's hell. In order for someone to make money, someone has to lose money. Well, those guys who are selling, they may be taking a profit. They could also be making a loss at the same time. Because statistically, if you're buying and then selling lower, you're losing, man. And if you are selling from the highest point and then it keeps on going up against you, you're losing. So there will always be that liquidity because market maker matches that liquidity. It's contract for contract. I agree with you that it is a zero-sum game, but in order for one event to happen, there has to be another event. Equilibrium. Buyers can be matched with sellers. Sellers will be matched with buyers. Aggressive buyers will be matched with passive sellers. Aggressive sellers will be matched with passive buyers because there are limits, orders placed on the book that would effectively say, you know what, I'll leave my orders in here for them to pick up, which means that when we look at this chart, we can see that here are passive buyers, okay? Look, here's a passive buyer. He's sat right there, $57,700 Bitcoin. He's prepared to buy it for $29.26 million. That's a bid. They're waiting. So that's a passive buyer. In order for the buyer to transact, some group of sellers have to come in and be like, oh my God, Capo was right. Go, go, go. Sell, sell, sell. And the reason why they can sell is because this dude right here who's in the know is like, you know what, bro? Give me your sells. I'll take them because I've got a pool of liquidity behind me of a 512 Bitcoin contracts per se, and or $29 million. I need your liquidity so I can get my order filled. That's why you see sometimes there's a contract here that isn't been fully completed. So let's find one right here. There was a contract earlier on. Here we go. One right there. It says for $23 million, okay? They only transacted 71% of the value of the initial amount, which tells me that price had reversed from that point pretty aggressively because maybe the market sensed that there was offers that were coming in as price was getting ready to go down, okay? So that meant that they could actually offer out and sell. So the market would naturally go to the areas of value that it can transact on. Because remember, market makers, Binance, these guys, market makers, they provide liquidity. So when you buy, he sells. Because where are you going to get your profit from? Okay? At the same token, when you do take a profit, you're taking Mr. Market Maker's profit. When you're making a loss, you are losing your money to market maker. But Binance and the market maker, they make their money on the spreads. They make their money on the transactions and the funding rates. And of course, the open interest, which means when you lose your leverage position, they swipe those margins, which is why we lost $600 million worth of long liquidations only yesterday or in this move to the downside, the 17% correction per se, okay? So when you understand this logic about the bids and the asks, you will never look at the chart again the same way that you would look at it from a retailer's perspective, all right? If anyone says to you, Bitcoin is dropping, it's crashing, inside your mind, you know that there's some big bids coming into play, which takes us back into the vector candle. Look at every single red vector candle that you see in this chart. There have been short-term sell-offs, and that's where people have been bidding. Buy, buy, buy. Oh, comes back up. Okay, then. Look at this. Drops back down, comes back up into the vector. Those of you who are new to this live stream, mad love and respect, and welcome to Traders Reality. We got FOMC happening in the next 7 minutes, which will be the federal funds rate, which will be declared in 7 minutes. Where is it? Oh, my days. Let me just put this off. Get rid of this, okay? Get rid of that. I don't want any of this, none of that, none of that. Yeah, we'll keep some of that, and we'll keep that, okay? So we're going to that. Here we go. So we got the FOMC press conference. That start, look, 5 more minutes time. We're going to get the federal funds rate and the economic projections and the statement. So we're effectively going to get 2 responses right now. We're going to get the statement. What are they going to talk about? What are they going to reveal? Are they going to hold the interest rates? Is there any scope for them to cut them later on? That's what's going to happen at 6 o'clock, which is in 6 minutes' time. So we're going to get the charts all ready, okay? Then 30 minutes after, we'll have the press conference. In that 30 minutes, I'm going to take questions. I'm going to talk about altcoins if you want me to talk about it. But we're going to see what Bitcoin does at the point of the actual federal funds and the statement and the projections. Okay, cool. So those of you who are new to this channel, my name is Tino. This is Traders Reality. This is the hybrid system. It's a free indicator. Download it. Go to the Traders Reality website and there's a tab at the top that says info. Click that and you'll be able to download it free of charge. It takes you to the trading view so you can install the indicator free of charge. Once you've done that, take this free course. It's free. And you even get 20% off the free course. It's free, it doesn't cost you anything, but it explains everything that we're going to be talking about right now in regards to vectors, ADRs, psychological levels, the one that we just spoke about at the start of the live stream. You've got to become a bronze member, which is free to become, so we keep spam out. But take this course, it's only an hour long, and it explains everything for you, okay? Now, going into it, we've got vectors right now with Bitcoin. So let's just break down this logic right now. Bitcoin, just before the FOMC, we know that there is offers up here, okay? So we're going on the idea that these offers at the top side of the chart, this is where someone wants to sell their Bitcoin. So if we've been bidding on Bitcoin all morning, we've been bidding, buying, selling, no. Why does it stop? If everyone is selling, why does it stop? Tina, it's because of this support at the 800 EMA, or it's the Asian session low, or it's the green vectors, it's the stochastics, the Fibonacci, all of this stuff. No. All of the indicators that attach themselves to charts, okay, are just visual representations of movement. But unless you are understanding that the reason why this stopped price, and we have a stopping volume candle in the chart as well, all right? Oh, hold on a second, Tina. You just said that RSIs, indicators, and all that stuff, they don't give you the true representation. Well, they don't. They don't tell you the why. They just show you the is. Oh, it stopped from there. I think it's going to continue from there. No, you want to add more weight to it. The bids. This is where people are buying. The reason why price reversed from this low right here on Bitcoin is because lots and lots of sellers were coming in, but they weren't able to transact off the back of the bids. There seemed to be this exhaustion coming into play, or absorption, where the bidders are just taking every contract that the sellers are trying to get off them, but price isn't going anywhere because there seems to be this group of dudes sat in this area picking up everything. And then the market's like, well, hold on a second. We're starting to see a lot of guys bidding here. There's lots of buying activity here. Well, we're going to have to start reversing back up just to keep the dynamics and the ebb and flow of the marketplace working smoothly. What happens? It reverses, starts to work its way back up. Nothing to do with RSIs, nothing to do with stochastics, nothing to do with support and resistance. You can refer to that when you understand that there are guys who are buying as it's dropping and that there's a pause. Something's not right here. If they've been selling, well, where are my sellers? It should be going down. The buyers are absorbing everything because you can't buy if no one sells and you can't sell if no one buys. You can challenge me on it, but this is the dynamics of the marketplace. Go and look at anything to do with the bid and the asks. Number of strategies that are available out there, talking about absorption, exhaustion, trapped buyers, and all of that madness, unfinished business, and all of these fancy ways of just displaying the psychology of the buyer and the seller. We've had a bidder's market this morning. Buyers. People will be seeing Bitcoin crashing. Tell me why it's crashing. Because it broke the 50. No, it's no, bro. Tell me why it's crashing. Well, it's broken down the stochastic. No, tell me why it's crashing, bro. I don't want you to tell me how to do Pictionary or, pinpoint. Like, what? Doesn't make sense, does it? Because of a stochastic? No, sorry, bro. There's more to it. Why was the candle created? Why? That's what you got to ask yourself. Here we go. Now, it's going to happen. Here we are in a minute's time. Are we ready? FOMC projections, keep an eye on this area up here. We can assume short term. And guys, please be mindful. Don't take trades during this moment. All right? Powell is going to be doing the press conference, so there will be some flavor coming into play, but just be very, very mindful with this. 3 bouts of data, interest rates, the projections, and the statement. So just be very careful with it. We're going to see some movement in a second on Bitcoin if we don't see it beforehand on the S&P and the NASDAQ. How long have I got? I've got 20 seconds. Can I do it in 20 seconds? Yes, I can. Here we go. So this is Bitcoin on the right. Quickly switch this over. Go into the S&P. Can you do it? Come on, T. Come on, T. There we go. There's the S&P on the top there. And then we're going to have Bitcoin right here on the offers. There we are. So there's Bitcoin's price right there, ladies and gentlemen, if you can see that. Are we good? Yep. Okay. Here we go. S&P pumping up. Here we go. We've got some movement. This is where it gets very tricky. Let's see what happens. Oh, wow. All-time high S&P. Okay. Bitcoin getting ready to start doing something. Offers are coming in. Pause. They're reading. So it's out. Now the algorithms are going to start making sense of it. Bitcoin coming up. They just pulled those orders. Look, you see that down there? They just pulled that. It could be a spoof. They just canceled it. Want to make sure they keep it up there. Here we go. And this ain't even before. This is before Powell speaking. All-time high S&P. Here we go. Come on, Bitcoin. Do the sweep up. Below the 65,000 zone. So below whole numbers. Have they been buying below the whole number? That's what we're looking at right now. Come on. Come on, Bitcoin. We're in. That's it. A minute into it. Here we go. Here we go. S&P. Doing its thing. Recovering of the vector right there. Seems to be stalling. She's off. Come on, S&P. Is this the stop run? What are you going to do? Bitcoin. Some bids are being pulled here. Offers are being pulled. Bitcoin not really doing much. S&P looks like it's going for it. Just want to have a look. Dollar dominance is coming down. Oil is down. So that's good news if oil comes down. Because then that tells me investors are like, okay, we don't need to worry about things. Let's just go back into the stock market. There we are. S&P just looks like it's going to run. Bitcoin in principle should be running up. It should be. Could this be the last bout of selling? Think about it. If you are a holder of stock right now and you're saying to yourself, right, we've got the FOMC coming and it looks like they're going to have a hawkish stance in the actual press conference. What could I do now? I better start selling. Price is going up. Everyone's buying right now. Awesome. Let me sell into them. Okay. How long they sell into them is a different story. Okay. Bitcoin doesn't seem to be doing it just yet. This is the S&P on the left right there. Let me just get this book map up. Okay. Let's have a look at where we are in regards to exo charts. Hold on. Here we go. Where's Bitcoin? Okay, so Bitcoin right now is still in value, ladies and gentlemen. It is still in value. All right, so there's Bitcoin's price right here. Having a look at Bitcoin's price. Got a red vector candle up there. I'd ideally want to see it go towards that. Give us that flavor, Bitcoin. Come on. All right, so we are in value, which is where Bitcoin's price is up here. So they're offering out. That means price should be going higher. But I'm cautious that this could be a stop run because we don't actually have the main event, which is the FOMC press conference. So we could see a little bit of movement up beforehand, hopefully. Come on, BTC. Offers are coming in, 65,400. We've got 119 Bitcoin orders at the top side there. S&P's pulling back. I'm not liking that. But what I really want to see is what's going on up here on the offers. 177 on the offers up here at 64,893. 109 offers at 64,993, which tells me it's below the whole number of 65. Logic would say we should see Bitcoin pump up. We should. This is what we're looking for. And this is before Powell speaks. It's in value right now. So what does that mean? It means that there's value between investors. I'm happy with Bitcoin's price in this range. It's going to be bouncing up and down inside of this zone. And it's going to be like, yeah, you know what? Happy days. We're cool with that. Let's see what it gets like when it starts working up towards its value area high, which is on the 5-day profile, goes way beyond the 67,143 region. So that's what we really want to see Bitcoin doing. Want to see it go into that. Offers down here on the book map as well. If I just bring this up for you, you can see the offers were taken away from it, but they were effectively moved up a little bit. So that means these offers believe that price could end up being higher, so they're going to be more inclined to sell it from a higher point. Because what do you do with an investment? You sell it higher. You buy it low, you sell it. Capiche? Are we all on the same page, ladies and gentlemen? Chat, where are you? Are you with me today, ladies and gentlemen? Huh? Hey, listen, if you are kind enough to like the live stream, ladies and gentlemen, I will truly appreciate that. If you will, please do like the live. There's 2,800 of you. 559 of you are liking the live. But you know what? That tells me you guys are actively listening. And that's good news for me. I'm hoping that you guys are sat here absorbing this information and you ain't busy wasting your time liking. But now that I'm not really saying anything that you can learn from, maybe like the stream. Maybe even subscribe. Maybe hit the ding-a-ling. Anyways, that's the bell. Oh, Vector Candle. All of this is happening before Powell. And what we don't want to see is Powell. Hey! We're starting to see some aggressive offers coming into play. Did you see that? Look at this, what's going on. Bitcoin needs to get out of this gray area. This gray area is value. I don't want value. That's like queuing up for a roller coaster, okay? Queue up for a roller coaster and you sat there like a wet lemon just waiting for the queue to go down. We're all in agreement that we all want to go on this ride because it's such a cool ride. Nah, I don't want to be in that area. I want to be in the fast track. And the fast track is the value area high. And that's where we want to see Bitcoin going. 67 is what we want to see. That means that the offers are coming into play. Look at this. Offers are now stacked inside of this range. They are all piling up on the book because it looks like there are people buying. I might want to sell my Bitcoin because I got some flavor coming in. That's the logic that we're going on right now. S&P is at phenomenal highs right now. And I look at this and I say, I could have just been in a long. No, that's not how I see it. I do not see it like that. We always say that when we're dealing with hindsight. Oh, I could have done that. Yeah, of course you could have, bro. But you just never know. And I don't like trading those environments. I like trading those back to the VWAPs, you know, after a volatile move away from it, because I am assuming that institutional investors, algorithms, big boy players, pools, funds, you name it, they're averaging out their positions and they're naturally going to go back into the reversion of the mean or the average of price so they can get a good feel for their clients, because that's what it's all about. It's all about the shareholders, okay? Looking at this, there could be a possibility that my projection for the NVIDIA, $1,000 NVIDIA, might be coming into fruition. I need to be paying, hey, we're getting offers. People are starting to cotton onto the idea that there's market activity. So now the bids from below before might think, you know what? It's now time to sell. Buy. People are buying now because the guys who bought were down. They were down below. You missed that boat, bro. Like, that's done. You did this. The stopping volume candle here, right? And then the one on the smaller time frames. It's going up. You can see it's going up. It's taking its time. But it's going up. 207 on the offers. Look, 203 orders right there. Why are you up there? What do you want to do? You want to sell? Okay. So we can assume Bitcoin gets to 64,893. We can see a little bit of pushback. All right. But beyond that, I've got 115, 131 Bitcoin orders. Okay. So I can expect 2 bouts of resistance inside of this area. So those bidders better start marking price, because bidders do actually load up as price is moving higher. So every correction back down, they'll be bringing it back up, okay? This is what we're looking for right now. We're looking for that to be the case. Looks like, look, see how that now has gone, that 200 has now come down into 181. See how they've pulled it now, because the prospect of it going up might not actually come into play. See how it changes. And we ain't even got the FOMC press conference just yet. Forget this movement. We're getting ready for some bigger movement to come into play. Any questions, ladies and gentlemen? Drop before the halving. Tino, you sound like a football commentator in Mexico during FOMC. You know what? Thank you very much for the 1,000 likes. Thank you so much for that. All right? But do I actually sound like a commentator? You know? I could spit price action pretty fast. I'm not going to do it because it can be a bit difficult to listen to. It's nice and slow, helps people understand. I want you guys to understand, oh, look, 209 coming into play again. So a minute ago, that was 180. They just pulled the order and then they pulled it back in again, pushed it back in again. Why? Well, because that could be because someone's like, hold on a second, it was going down. That means I'm not going to get my order filled. Maybe just take some of it off. Oh, looks like it's coming back up again. Let me add to it again. The more we see this order sticking in the chart at 64,893, the more we are inclined to believe that they're going to get filled. But that 211 up there doesn't mean that it's the magic of the market or there is a player up there who knows something. It's just understanding the ebb and flow of the market. And this is what I mean about adding weight to your analysis. The vector candle hybrid system tells you, it gives you the clue. Bids, market maker, bidding, trapping traders short on leverage. He's coming back to that. Local vector candle. Please go and watch today's live stream where I explain this as a question that was asked by someone. Tino, do they always come back to the vectors? And I explain the logic of being local. Okay? Okay then. Golazio. Yep, I remember that. Okay. I'm listening in my bed, but when I hear Tino talk like this, I feel FOMO. No, don't be feeling FOMO. Computers are running this game, not buyers and sellers. Well, what's programming the buyers and sellers? Computers. Of course it's computers, bro. Come on, man. What a wet comment. What we got here? Tino, you mad dog. Yes. I've been with you from when I think... Here we go. We got these. Let me just look at these super chats. Hold on. Tino, fill that gap at 50K, 58K. Santos Santis. Come on, bro. We're really down with the gap filling, ladies and gentlemen. Hit that like, hit that ding-a-ling. Ghost, thank you very much for that. We got some member... Who's giving out memberships? RTB, thank you very much for your gifts, my friend. All right, then. Money flow on Dixie flying. Okay, then. All right, then. So, look, we have effectively got 20 more minutes until the flavor begins. The market seems to have taken on this news announcement pretty positively. So I'm just going to have a look at what has been... No, I'm not going to do that. I don't want to change the charts. Powell, no. Let me just look at this... where are we? Let's have a look at this poll. So most of you believe that Powell is going to cough 5 times or more. Okay. Some of you believe none. 3 times, 17%. Okay, fair enough. We'll wait until this. How has the poll got more likes or more votes than the likes? You have to... It's next... Anyways, we'll deal with that. Well, what's going on here? Hold on a second. Hold on. Bitcoin, no movement yet. I'm not done with you yet. No. Don't want to do that. Offers are coming in nicely. Right, you see this. There is a lot of... Not inconsistencies, but there is a lot of activity on the offers right now. Lots. If they can maintain this price boundary and get above the 50 EMA right here on the 2-hour time frame on Bitcoin, then logic would say we would be expecting some movement towards that red vector. It could be the case. Powell scratch, no. If I go get a platinum membership, does the next payment come out on the 1st, or would it be 30 days from the day? Right, and yeah, it's 30 days from the day you join. You join today, it's another month's time from that. Okay, you join tomorrow, it's a month's time from that point. Okay, but if you join today, we got it until the end of March. It's 20% off on the platinum discount for your first month. Just use the code BULLRUN, which is pinned to the top of the chat, and it's in the description of this live stream. Use the code BULLRUN to get 20% off your first month off the Platinum membership. This is where we provide setups similar to what you're witnessing right now, where we put out setups for Euro, for Gold, for Bitcoin, for Ethereum, Solana, Oil, NASDAQ, and that's it. I sometimes do Matic as well, but I do a breakdown on each of those assets every single morning and in the evening. Not so much the evening because it's all about the Bitcoin is in the evening, Ethereum in the evening, Solana in the evening. I always do those 3 assets, main assets that we look at, okay? Now, looking at the book map for a second, it's promising, ladies and gentlemen. But I think they did this last time as well. But last time we were at relatively decent highs. And we hadn't come from a move lower. We came from a move higher, and they missed the offers. So the offers were coming into the chart, in essence, suggesting that they wanted to sell. Someone stepping in. Are we going to go for that too? Look, 64,893. They're going to, if they take 64,893, they're going for 65. Look, Look, it's there. They want it. Come on, Bitcoin. Give me that flavor. Move towards out of value. Go away from this. I don't want you. Here we go. They're holding. Oh, come on, Bitcoin. Just go and break that 233. I need them to break this offer right here. So the narrative is suggesting to me that they're offering out. So people are now coming in, buying, and they're selling. The selling's coming from these guys, the offers. They're selling into retail who are buying up right now. This should lead Bitcoin up. Look, it's 65, man. They have to go 65, even 67, even 68, even all-time high, baby. Now, let's not get a little bit too excited. 255 on the offers right there. That's going to get swept. Come on. They're adding to it as well. Come on. Don't do this. Bitcoin, do not embarrass me. Please. I bet some of you are like, please don't hit, please don't hit, please don't hit. Oh, go. Oh, wow. Okay, then, cool. Now, listen, right. Now, some of you that are holders in this live stream, okay, you're probably thinking, this guy is bat crazy, okay? But you're going to be using this sort of information to understand the bigger picture. Right? Let's not deny it. You are having the same dialogue. What's going on? Are you amongst the buyers inside of this range? That's the question. And if you are among the buyers in this area, because look, they came down to this point. This is in essence a stopping volume candle. They came down and they transacted just a little bit more. Well, they didn't even transact, okay? But they came back into this same area and the market was like, nope, no, thank you. And up it went. We need to start getting the offers. These guys have done their business, all right? So now they're offering out. 13 million at 66,950. Bitcoin has to clear this 65,700 to even suggest the idea of going back up to 70. And it can stay in this range and just completely flop. But what I'm trying to get you to understand is at this point in time, this is what you're looking at if you're a day trader. If you're a holder looking at the bigger picture, you're going to be saying to yourself, hold on a second, what have I got going off over here? I've got this beautiful vector candle, violet recovery, ladies and gentlemen. Did you guys draw it off? Did you guys mark it off today? Because look, Bitcoin tapped at that midpoint there or thereabouts. If you can see, I mean, look, bro, that is just rough. Look at the wick. That is crazy how they reversed from that point. And this is on the daily. You took a short from 64,869 down to their $400 move. I mean, that's relatively decent-ish for a scalper. But it's at reactive points, the midpoint of the vector. Now, what we are looking for holders, remember, as holders on the 420 method, this is your area right here that you want to be paying attention to where the first 20% is being distributed right here. That's your first 20, all right? Your first 20, in essence, should be starting to make you some money if Bitcoin can actually start continuing to move back up from this point, all right? But the next area would be down here. That would be the next area. And be okay with it. Because you guys understand it's all about the bids. The bids are going to be picking up all the sell orders, all right? The ones that are coming in the wrong direction, okay? What we got here? All right, Ghost. Tina, can you tell me what you do think of PMPY chart on the DeFi side? I'm looking for the daily and weekly chart on Dex Tools, please. Thank you. Dex Tools, right. Let me just have a look at that asset for the gentleman over here. PMPY. Is this the asset that we're talking about, my friend? You're looking at the weekly. Daily, weekly. I mean, new asset, yeah? Ghost, is that correct? All right, so as it's a new asset, 2 cents. I mean, to make any projection off this, looking at this, you'd have to be understanding what's going on with the asset behind the scenes, okay? Like, so if we just go and have a look at PMPY, let's go and have a look at this. Where are we at? Okay, market cap, 15 million. Not bad, okay? Ethereum, the actual exchanges it's on. Do we have any big players in here? MEXC, just for trading. Most of the volume's done on Bing. Okay, fair enough. No real big players on there. No Binance, no Crypto.com, no Bybit, no Fomc, no anything. Okay, then, cool. So, relatively small market supply itself. Okay, then. So, yeah, good project with small market cap. Wow, I'm bullish. Okay, cool. So we'll go back into that. It's relatively new, all right? So without going into the metrics of the coin itself, who's it listed by, what's the developers saying, what's going on over here, we have ourselves a nice little phone call. Could be Steve, could be maybe, maybe not. We don't want it to be Steve. If Steve starts calling us, then we've got ourselves a bit of a problem. Look at this beautiful move to the upside by the S&P, man. Let's get back into it. What time are we on? Okay, 10 more minutes, ladies and gentlemen. All right. I mean, it's just give that asset a bit of time if I'm correct with it. Okay. Okay. What have we got here? Oh, come on, go away. Okay. Be wary of the analyst who doesn't teach you how to hedge. Hey, listen, I've read that. No, this is very important. Yes. Yeah, be wary of an analyst that doesn't teach you how to hedge. Hedging is very important if you understand how to do it, okay? There are many forms of hedging, many forms of hedging. You can take advantage of commodity hedging, where you're going into oil, gold, Bitcoin, okay? You've always got to protect yourself, all right? Now, there's trading hedging-wise, where you're placing a long right now and you're in a short from the top side. All right. And when you meet that happy medium, it doesn't matter if it goes up or down, you're still making money. Okay. But in order for you to utilize hedging correctly, you need to understand the dynamics of the marketplace before you even consider hedging. Okay. So just remember, hedging is a sophisticated way of investing, but it's also a protective way to look after your portfolio. All right. And that's what we spoke about earlier on today in the live streams. Okay. What's going on with this? Oh, no. Let's just sort this out. Go back into that. No, click here. All right, then. What time are we on? We need to get ourselves prepared for this live stream. Any other questions? Okay. Nice glasses. Thank you very much. ETH is currently printing a stopping volume candle on the daily. Assuming it closes in this state, do you see an altcoin season? Do I see an altcoin season? Well, let's have a look at the altcoin season. Are we in altcoin season? Well, not just yet. We're not in an altcoin season just yet. However, going into Ethereum, let's just bring Ethereum up, okay? There's this, of course, this story about the Ethereum ETF, where they're now considering the logic of staking with the ETF itself. That's why LDO, Lido, has been pumping up lately because of it. I'm just going to get rid of this. Yeah, that's why Lido's been pumping up, because they hold 30% of the supply. That's great news for Lido. Coinbase would in essence be supply, they'd be doing pretty well because they hold around 17% of the supply. All right. But in reference to your question about the stopping volume candle on the daily, this is what the gentleman is referring to, or lady. The stopping volume candle, I mean, this principally is not so much a stopping volume candle, but if you notice, Ethereum's tested the 50 EMA before Bitcoin. All right, that's why I will always trade Ethereum over Bitcoin, because then that tells me what puts me in that pickle where I could be in a long on Bitcoin right now, thinking to myself, hold on, is Bitcoin showing the true element of support? Or is Ethereum showing the true element of support? Well, the Ethereum has gone back into the area which we would understand to be the mean or the average, okay? Or even if you're looking at it from a perspective of a VWAP, because we know that investors, institutional players, they're transacting at the volume weighted average price. Whether it's sells or buys, they're getting an average, which could be part of a bigger picture for them on a sum of monies or a pool of liquidity that they need to offload. For example, if I'm a Bitcoin trustee and I want to buy as much Bitcoin as I can, I need to make sure that I'm buying Bitcoin at or the volume weighted average price. And if we were to simply take an anchored VWAP by principle from the low of this point and then mark it all the way across, the logic would say that this VWAP right here would be the point where I should actually load up Bitcoin. Or if I then take another anchored VWAP and mark it from this low point here, I would say, okay, maybe a fill from that point might be good, might not be good, but the bigger picture says that I'm still in an opportunity to pick up Bitcoin at a good discount, assuming that it's going to reverse from that point. Well, Ethereum has done that. They've tested that point. You can see it's broken down from that point. So then we take another anchored VWAP, look at that perspective, put it there, look at that. Smack onto the VWAP, and they reversed from it as well. Okay, so that's good news. That tells me now that there's guys that are actually transacting in this area, which makes sense behind the back of Bitcoin bids coming into play inside of this zone. okay? Because money goes into Bitcoin, it goes into Ethereum. But I understand when you're saying that you want to see the altcoin market. I don't think we're there yet with the altcoin season. We've had that madness with, of course, with Solana and the meme coins. I don't want meme coins to be the reason why Bitcoin's going to, or the altcoin season is going to start. We want to see coins like Dogecoin pumping, SHIB. You want ADA, ADA to pump. You want XRP to pump. You want BNB to pump. You want Link. You want DOT. You want, what other altcoins are there that we haven't even mentioned? Where are we? Where's my altcoins boss list? Right here. Here we go. These are all the altcoins you want to be looking at. Look, Vite, Trias, RSCR, Kava, Crow, Coty, like all these decent, VeChain, Jasmy Coin. I mean, look, there's investors. I had an article. Damn, I didn't bring it up. Had an article suggesting that there is a pension fund that is considering adding Bitcoin to its pool. All right, so that's great news because that's only going to encourage Jasmy Coin to pump up because if these guys are going to start buying Bitcoin, come on, you don't think guys in Japan are going to be endorsing their own coin? Like, come on. Doesn't make sense for them not to do that, okay? But yeah, it's right now, until the FOMC comes out, we can't say nothing about price. We can make guesstimations, we can assume, we can hope, and we can put together the logic that if Bitcoin is going to reverse from this point on the back of the news of the FOMC, then logic would say that the buyer's market is over, and that means the seller's market's coming into play. Remember, seller's market means prices are going up. And if you are still asking that question, what does that mean? How can the seller's market be coming into play if prices are going up? It doesn't make sense. Well, this is where people are selling from. Someone is selling 13 million.47 initial amount contracts or value of Bitcoin at 66,950. They're selling, offering out 10 million at the 69,790. They're selling 72,700. They're selling $27 million worth of Bitcoin, which is 383 Bitcoin. So that's what we mean a seller's market's coming into play. And that seller's market could be short term. It could last for the next 2 hours, and then it can come back into the bidding profile. Okay? Are we cool with that, ladies and gentlemen? We've got 4 minutes until the madness will unfold. Here we go. Anything else? So, looking at this possible ignition algo playing there, the lower band has a bigger gap. Would that indicate that they're trying to drive prices higher into their upper band of sales? So you're making reference to this, okay? So look, there are lots of interpretations regarding this ignition algo thing. The coach for the book map, Bruce, he explained it to me and told me what ignition algo is. And you see this thing here. You see how you've got bids coming in and out, and you've got this jagged edge on the book, on the order book here. The word is, or the logic here is that the algorithm is in essence trying to move. It's trying to sway price. All right. Remember, it's computers. All right. That's designed to pull an offer, pull, bid, stack, pull, bid, stack, add offers, take them away, add bids, take them away. And it's taking all of that liquidity that's stored in certain accounts and feeding it into the marketplace. All right. You can see that you've got this behavior. If I just zoom out a second and show you, this is what the gentleman's making reference to. It's this continuous, look, this jagged edge behavior, okay? So something's brewing with this. And it's not fully ignition algo. You'll see it. I mean, there's a live stream where we actually saw it. There is a clear diagonal move on the offers or the bids, where you just see a diagonal, it's like a line that's diagonal going into the chart, all right? It's so clear as day. This is like a mini version of it, all right? But ignition algo is in essence where they're trying to, it's like the algorithm's trying to move price, aid it in a specific direction, okay? All right then, ladies and gentlemen, I think the time is close. Yes, we are. All right then, so we're going to then look at the 1 hour time frame, okay? I'm going to clear up all of this stuff to keep our lines nice and clean. I'm going to get rid of that so we don't have those sessions to make it nice and sharp for us. We're going to have the book map over here on the right. We're going to be paying attention to the offers, so I'm just going to be mindful of that up here. Get myself sorted out right there. Can you see that nice and clear? Happy days. We're then going to get Powell over here. Bring this up here. We're going to increase that. Getting ready for it. Happy days. What are you doing there, T? That should be fine. Oh, Tino, what are you doing, bro? This is painful. All right, then. Cool. So we'll just press play there. That should be coming into action right now. All right, then. Then we're going to get exo charts. We're going to mark off Bitcoin's profile for the range for the day. I'm going to tidy up that bad boy. Now, if we are new to the channel, ladies and gentlemen, you know what the flavor is. Make sure you are liking and subscribing, hitting the bell and doing all that jazz, all the fun stuff that we look at when we're on YouTube, ladies and gentlemen. Okay, so I'm going to put that, I'm going to keep that over here just so that we can monitor it. And then we are all good to go. All right, are we good with that, ladies and gentlemen? Let's have a look what's going on over here. I'll be looking at Pepe very, very shortly. Why does it feel like it's going to be a flop show during the speech and the movement after the speech will happen? Iron, there is a possibility that that's going to be the case. There is a huge possibility. And if you go back, listen, ladies and gentlemen, go back and watch the last FOMC live and look at the chart and look at how we've set everything up. You have these offers up here. It's exactly the same, okay? Bitcoin was coming from a move to the upside, all right? And we're just waiting to hear what they have to say. But what's got my attention is we're in this same story again where the offers are coming in. People want to sell, and we're waiting to see if price can actually mark up into that point. And last time we had this situation, it didn't. So we've got to be very careful. Yeah, listen, the play button is there. Whoops. I'm going to just bring it up on alternate players. Let me sort this out. Put it up on the use of the tube. And then we are good to go. Get yourselves your coffees. Do what you need to do, ladies and gentlemen. We're going to bring up Powell. Just waiting for it to come into play. Here we go. 31K watching. Are we in? Yes, we are. Okay. Here we go, ladies and gentlemen. The boy is speaking. Let's roll.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace.
Okay.
GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets.
Just reading the data that's
The
already
median
come out.
projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
Okay,
The
rate
economic
cuts.
outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Let's get the party started, ladies and gentlemen. Question time. Here we go. So far, it's doing all right. Bitcoin's doing well.
CNBC, Mr. Chairman.
CNBC, boring.
The
This guy
projections
again.
show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming, as I pointed out in my opening remarks, we did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down. And so.
When you, just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks
Here we
for taking
go,
our
Rachel.
questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
Okay. And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
That wasn't
Nick
Powell's
Timmermans of the Wall
cough.
Street Journal. Chair Powell, during your congressional testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
This guy asks those
more,
tricky
I would
questions,
put it more
man.
in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where if we ease too much or too soon, we could see inflation come back. And if we ease too late, we could do unnecessary harm to employment and, people's working lives. And so, we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, we wanted to be careful about that decision. And we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Check yourself, bro. Powell said it.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that you still need? Or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
But, just a question of, is there even enough data for you to be able to?
We'll take, things can happen during an intermeeting period, if you look back. Unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris.
Hi, Chris Rieger at Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about what might be behind that? Is there a real sense here that the economy has perhaps changed in some way, that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question? I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. My instinct would be that rates will not go back down to the very low levels that we saw where all around the world there were long-run rates that were at or below zero in some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year. It's already at, or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident, or the last press conference you sounded pretty optimistic you would get more confidence through the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your last part of your question again.
Well, just are you still optimistic that you'll get the confidence you need this year?
I love it when you ask that question.
I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
Well, that was special.
Gina Smilik, The New York Times. Thank you for taking our questions.
Gina, what's good?
Per your comment to Anne that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side activity that we had last year, with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Neil. Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now, and in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
A relevant question.
We think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate. Things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite, financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color how the committee is thinking about inflation dynamics now. What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking, and saying we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and you can, and I think many people did see the possibility of seasonal adjustment problems there. But again, you don't want to, you got to be careful about dismissing the parts of the data that you don't like. So
check yourself.
Then February wasn't as high, but it was higher. So the question is, what are we going to see? You know, we tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and you know, feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, you know, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Go to Edward.
Prematurely, bro. Why say that?
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from, the Federal Reserve, for independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they? Well, first of all, I respect in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate is for maximum employment and price stability and the other things that we do. And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 24 lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who, in our system of government, have oversight over our activity. So but at the end of the day, we take that on board, but we have to make our judgments, and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Sorry.
Thank you. Claire Jones, Financial Times.
Hey, here we go.
Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed, just to understand that book. So I treat dissents with real respect as well.
So Simon, one would be okay.
First time I've seen him laugh.
Simon Rabinovich with The Economist.
Wow.
Can you hear me?
Economist.
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate, and people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve.
Okay, bro, you leave it there, man. That's fine. You leave it there, pal.
Steve Matthews with Bloomberg.
Bloomberg, here we go.
You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May, and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature?
That guy like breaking wind whilst he was talking then.
So that is what we're discussing, essentially, and we're not discussing all the many other balance sheet issues. We will discuss those in due course, but what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in Treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea. that's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress. And that can cause you to prematurely stop the process to avoid the stress, and then it would be very hard to restart, we think. So as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And, fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this,
You hear what you just said?
we'll come back to the other issues about the composition and the maturity and revisit those issues. But it's not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Victoria.
It's not anyone significant.
Hi, Victoria Guida with Politico.
Victoria?
Also on the balance sheet, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
This is a big thing right now.
We'll
the
be
balance
watching
sheet
carefully.
of the Fed.
But one of the reasons
Massive.
we're slowing down, we will soon enough, fairly soon, I should say, slow down, is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but we had some indicators the last time. This is our second time in doing this, and I think we're going to be paying a lot of attention to the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle, where we wound up in a short reserves situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates. Those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops nearer at zero?
I think we broadly think that once the overnight repo stabilizes either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
Let's go to Jean.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask also about the balance sheet. Will you said that starting the taper sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point? And will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these what's happening in money markets, in particular a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point ultimately where you stop allowing the balance sheet to run off, but then from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow
really
pace.
confidently. That
So
tells
you have
me that the harder questions are now out of the way.
A slower pace.
So let's just now break it all down, okay? I'm not interested in that anymore. Let's now look at what's going on. If you have been here, welcome to Traders Reality. My name is Tino. We just watched Powell have a conversation. I'm now going to break down Bitcoin's price action and help you guys understand what we can expect going into the end of the day and the start of Asia. So if you've been paying attention to the live, you noticed that I was marking off certain areas with regards to the offers. And did you notice how we were highlighting offers that kept on coming in and they kept gunning for those offers, okay? Again, seller's market, price going up, okay? Notice how this area now has successfully gone and cleared out those offers, but notice that we're getting more offers coming into play. Now, by the principle of the hybrid system, we are on the assumption that they are in value. They've gone away from the VWAP. So now it tells me that they want to try and mark up higher from that point. So even though they've moved away from VWAP, which is 65,356, remember what we said at the start of the live, are they building longs below the keyhole number, 65K? They've now swept through that zone. Logic would say that if I go into smaller time frames, we should see green vector candles breaking the hole in half number principle. Start off with the 5-minute time frame. Green vector right there. Come on. Would that be? Oh, that was beforehand. Yeah, well, there's the green vector. There's the green vector that will be breaking the 65K range right there. Happy days. That's what we're looking for, because then that would solidify the idea that they're loading up longs below, which was this little area here, to start lifting price to the upside, okay, and hopefully continue with that narrative. So we're going into what appears to be the red vector candle up at this point right here. Might want to take this midpoint of the red vector, and we can assume that the range daily high, which is the sum of Bitcoin, or the average daily range, which is the sum of Bitcoin over the last 14 days, how high or how low can it go? Well, we're heading close towards that point right now, which is the 65,971 zone. Okay, now going into other assets, just quickly have a look at what's going on. So Euro comes down to only shift back out again. What a joke that is. All right. And then going into gold, gold has actually just shot up. We made a projection on gold. It's gone to the bin and it's actually gone shot high. What a joke that is. Going into Dixie, it's pulled back down again. That's fine. Going into oil, getting ready for a reversal move inside of that range. Quickly going into the S&P and the NASDAQ. That is wild. Look at that S&P, all-time highs. They're just going for it. All-time highs, NASDAQ. Not yet at all-time highs, which is a bit of a problem. Not yet all-time highs. The yields market, 2-year, gone down. That's good news for us. Down on the 10-year bonds, on the 5-year, sorry. The bonds market should be moving up. Okay, then, cool. All right, then. With that being said, ladies and gentlemen, quickly go back into Bitcoin. It still looks like it's going to be gunning for it. Keeps on marking higher. Solana, doing very well. Ethereum, not so much. BNB is up 6%. Well, not so much up 6%, but getting ready to base out. This is where Asia could actually deliver the flavor this evening, ladies and gentlemen. Looks like Bitcoin's having its day and marking up to the upside. Okay. Any questions, ladies and gentlemen? Psychological levels are about to come into play. They sold from there last time. This is very true. Yep, ladies and gentlemen, remember, just before we go, 20% off the Platinum membership. Use the code BULLRUN, which is pinned to the top of the chat and in the description of this website. 20% off your first month. Just go to tradersreality.com and you'll be able to take advantage of that. I won't be going live tonight, okay? So with that being said, ladies and gentlemen, mad love and respect. Thank you so much for being with me tonight. I hope you've enjoyed it. Bitcoin is about to pull something very, very interesting. Just be mindful as we are approaching the range daily high for this evening. All right? Make sure you subscribe on the way out, ladies and gentlemen. Thank you once again, and I'll check in with you all in the morning. Mad love and respect. Peace.